Good afternoon, everybody. Thank you for joining us for this live. Today we will be talking about the Finance Act of 2025. This is for Kenyans. So, if you don't already know, the bill was signed into law yesterday. That is on 26th June 2025. So now we're operating with the Act. So we'll just break it down as simply as possible. We'll get straight into it. If you have any questions, please ask in the comment section. Engage with us. Say hi if you're there. Let us know that you're watching. We're going to try and break this down as simply as possible so that we understand exactly what the bill or stroke act now is talking about, how it will implicate on your business if you're a business person, and even if you just want to understand the finance bill. And this is a good session to stay into because we were trying to simplify it as much as possible so that we know what is in there and what is not in there. All right, so great, we will go straight into it. So number one, employee and pension measures. So we have point one, there'll be tax-free per diem. The tax-free per diem has been raised from 2,500 to 10,000 shillings per day. So what does that mean? Normally, the government does not require you to be taxed for per diem up to 2,500 shillings. So for example, if your company is giving you per diem of 5,000 shillings before you'd have to tax to, like, the 2,500 was not taxed and 2,500 was taxed under your employment taxes. But now the base has been increased to 10,000, so up to 10,000 shillings is not being taxed. Number two, pay reliefs are going to be automatically applied. So that means employers must now include all allowable deductions and exemptions like personal relief, mortgage interest when calculating your pay. So this is if you're an employee. And then, of course, pension gratuity exemptions have been broadened. So now, before we would have people who are above 65 not being taxed for their pension and gratuities. But now this is for everybody who is now receiving their pension and gratuities, regardless of the age. They are now not being taxed for that. Also, then in the act, they have replaced the word husband with spouse, so that now it is going to be inclusive for everybody. So what this means is for you, if you have been saving up for your pension, if you decide to retire at 55, beyond that point, we are not going to be taxed for that. Okay, great. Point number two, corporate and business tax changes. Okay, so we're looking at loss carry forward has been capped at 5 years. So previously, you had indefinite tax relief, and this has been okay. If you have been in business for a while, when you file taxes and then you're trying to claim anything. So if you've been having losses, you claim the loss moving forward, and there has been no limit to how far you could carry forward. So now that has been capped at 5 years. That is important for you to note if you're running a business. And then there's limits on tax deductions and incentives. So now there are no deductions for timber-related costs. We used to have what is called regional investment allowance outside of Nairobi and Mombasa in what we call the special economic zones. Those have been removed. So if you were enjoying that, and if you're running a business outside of Nairobi and Mombasa and you were enjoying benefits under the special economic zones, you're now going to be fully taxed. Then 150% deductions reduced or removed for large investments. Yeah, so we also have advanced pricing agreements, that's called APAs, or country by country reporting, which has been introduced for multinationals. So what that means is if you have a multinational company, or if you work for a multinational company, now you're required by law to present all the countries' books. So previously you were only required to present the ones for Kenya, But now you have to present books for all the countries that your company is doing business in. So this, we talk about multinationals, we think about companies like Coke, we think about big four and all those other people. But you could just have a business here in Uganda or have a business here in Kenya and Tanzania. You qualify as what we call a multinational. So you will need to be presenting books for both countries to KRA. I think that is a simple explanation. All right. So they have also introduced what we call the Nairobi International Financial Center benefits. So these are for companies this is meant to attract companies to come and invest. So these certified companies will get 15% corporate tax for the first 10 years. If you have been in business, corporate tax usually is at 30%. So this is trying to get them to come in. Then thereafter, they get the 20%. Still, after the 10 years, they now go to 20%, not 30% as is expected for everybody else. If you want to know what you need to do to qualify for this, we can have a conversation, or maybe you can comment below. All right. Now, let's go to withholding tax adjustment. This is point number 3. So, withholding on goods to public entities. So, suppliers to government bodies will now have tax withheld at source. So, previously, when you were supplying to government, you'd be paid and you'd be required to pay your taxes. But now, if you're supplying government, there will be withholding tax at source. Okay, so this would mean immediate cash flow reduction. So if you're expecting a payment of say $500,000, you expect to be receiving minus 5% of that, which is the common withholding tax. And then we will now have withholding on scrap metal. Scrap metal was tax exempt. Now it will be expected to be taxed. And then we have withholding on non-resident ship or air charter services. So foreign-based airlines and shipping companies now pay 2.5 tax at source. So if you're doing business in Kenya, for a company coming to do business in Kenya, that makes it a little less attractive because it's now more expensive. And so the definitions for royalties has been expanded, especially for software purchases. So if you're in the IT industry, this now involves you. So software purchases through local distributors is now considered royalties, which will trigger what we call withholding tax. So I think for anyone who doesn't understand what withholding tax is, so in any transaction, say for example, like for us who are a consulting firm, because we don't automatically pay VAT, what the government does is they instruct any company paying us when we're especially doing our items invoice. On the other end, the company will be expected to withhold 5% of the money they're supposed to pay us. So for example, if we are billing someone 100,000, they will pay us 95,000. Is that direct tax? No, it is not. What it means is that it is money that is government is holding while waiting for us to do tax return. And then now, say for example, in the end we'll have to pay taxes of 300,000 and the government has withheld 250,000. So now they will deduct 250,000 because they're already holding that, and then the 150,000 will be required to top up. So the withholding tax is money that the government is holding, because now, say for example, we said we were supposed to be paid 100,000, they withheld 5,000. That 5,000 shillings, they don't keep. The company that is paying us, they don't keep. They actually pay to the government. So, and what we receive is what is called a withholding tax certificate. So now at the end of the day, based on the number of tax certificates we have received, then now we can claim that against our corporate tax. I hope that is clear enough, and I hope that is simple enough for everyone to understand. So that now we understand how this withholding tax across other companies, or rather across industries, is affecting them. So you see, because if I'm supposed to receive 100,000 and I receive 95, then that 5,000 I have to wait until the end of the year to realize that, and I can only realize that with tax. So that actually does affect my cash flow. Okay, so I hope that is clear enough. And if you have any question, please comment in the comment section below. And if you don't understand anything, make sure you tell me I don't understand, so that I explain to you so that you understand. Okay, so back to the expanded royalty definition. So the impact of that is it will increase tax costs for local firms who are buying software licenses from international providers. All right, I hope that is clear. All right, so let's go to digital and international tax updates. Wow, interesting. So what we call significant economic presence tax. So this is for a company. Let me give you an example. Say like Airbnb, which is not a local company, but because it really does a lot of transactions in the country, it has what is called a significant economic presence. So if they're doing business and they're making money out of our country, then they're now required to pay taxes, or they have been required to pay taxes. So previously, if they were making less than 5 million shillings, they were not required to file. No, they would be required to pay taxes, but they were not required to file. So, but now the exemption that they had of 5 million turnover has been removed. So now it means they pay taxes from zero. So immediately you're starting to make money in the country, you're supposed to pay taxes. So this applies to any digital or e-marketing activity in Kenya, including services via the internet, even if you do not have a local office. So it doesn't matter whether you have a local office or not. So this could impact even people like Tinder. Tinder don't have an office in Kenya. So for people, those of you who are using Tinder, just know that they will be required to pay taxes. If you're paying for, they're paid for tax. There must be profiles that are paid for under Tinder.
Yeah, it's premium to get all the features.
Yeah, so if you want all the features on Tinder, now Tinder, the monies they're receiving, they will be required to pay taxes to the government of Kenya. So it's important to know how that works. All right, so this means that any business doing in this side of the globe will have increased costs and compliance burdens for any global digital services operating in Kenya. And then we have what is called digital asset tax. This is, for example, crypto. The tax has been reduced from 3% to 1.5%, which makes trading cheaper for cryptocurrency. And then there's now a minimum top-up tax. So there's a clear due date, which a company must pay additional tax within 4 months after the year ends. I think that is very self-explanatory, I believe. So now if you have a top-up tax, you have to pay within 4 months after the year has ended. All right, point number 5, VAT and tax procedure changes. So we have VAT refund timeline. So this has been halved. Normal refunds must be claimed within 12 months. It used to be 24 months. So if you have refunds and you've been waiting to see your auditor is taking time to calculate TTC, make sure they have done it within 12 months. Beyond 12 months, you don't get your money. So, and then bad debt VAT. So if you've paid VAT on, or you've claimed VAT on a transaction that you have not been paid on, so you've paid VAT but you haven't received the money, and you want to claim it back from the government, you need to file that within 2 years. The limit used to be 3, so both have been reduced by 12 months. Okay. All right, now, if you misuse, I know some of us have been doing this if you've been in business for a while. If you misuse the VAT exempt clause on any goods, and then KRA finds out, you will pay VAT after the fact. So before you just get into trouble, but now for sure you pay VAT after the fact. So there's no point of hiding. All right. Now, another thing, agency notice powers have been extended. So KRA can now issue notices to non-residents, freeze assets, and collect priority information even from third parties. I think this is something all of us have been scared about, that they will get information from M-Pesa, they'll get information from banks, which they have already been doing. But now, if you're non-resident, that means you're a Kenyan but you're not in the country and you're supposed to pay taxes here. They are now allowing KRA to get information from any other country, to freeze your assets, I think especially the ones that are local, and to be able to collect priority information. So regardless of whether you're in the country or not, make sure that you're not paying double taxation. Maybe you make sure you have done proper tax returns. Just because you're not in the country, don't assume that you have no obligation to the country. This is something that needs to be very clear for Kenyans, especially who are outside the country. Okay, then we have repeal of mandatory notifications. So before, businesses would be required to notify KRA of minor changes. So example, if you change your office address, if you change your directors, you'd be required to notify KRA. That has been removed. You'd be required to notify them within 30 days. So that has been removed. It's KRA's job to figure out who the directors are. Well, I hope that is clear enough up to that point. If we have any questions, please feel free to ask. All right, so next point. So other notable updates. So if you have mortgage interests, so the mortgage, if you have a mortgage, I don't know how many of us have a mortgage that you're paying. I'm looking for my other notes. If you're paying a mortgage, so you now have the interest relief that has been expanded. So previously you'd so it now includes loans for construction. So you don't need get mortgage relief for a house that you've bought. But if you've now taken a mortgage for a house that you're constructing, you now have mortgage interest relief from your payslip. And let me give you a tip now that most of us are probably entrepreneurs. If you are an entrepreneur and you're paying yourself a salary, make sure you receive a payslip. You can actually take that payslip and take it to the bank and get a mortgage. Try and teach yourself as an employee of your company. You will tend to find that there are a lot of benefits you get systemically when it comes to tax and all those other things when you're actually paying yourself a salary, and you'll be able to access a lot of things that employed people get. You find, especially with banks, they tend to favor people who are employed. If you are employed in your own business, all you need to show is that the business is big, it exists. They can come and visit you, but make sure you have pay slips showing, and you have transactions that match those pay slips in your bank statements. You'll be able to enjoy the same benefits. Banks, financials prefer people who are employed. You don't miss those benefits when you're an entrepreneur. Employ yourself. Get all those benefits. Get all those reliefs for taxes, and you'll just find it easier than trying to just remove money from your bank. Great. Now, a lot of large companies would give donations to public sports facilities. If you've been in business long enough, you know you're trying to reduce your tax liability as much as possible. So things like donations to sports facilities were allowable expenses. Now they are not. So sponsorship is no longer allowed. I'm very sorry for you guys. But this one usually is for large businesses that are trying to reduce their taxable expenses. To increase their taxable expenses. All right. Now, if your company has what we call a fiscal year of, say, January to December, and you decide that's not really working for you, maybe because you're doing a lot of business with large corporates, or you're doing a lot of business with government, so you figure out my fiscal year needs to be July to June, like many of those organizations, and you decide you're going to change that. Previously, if you write to KRA and they don't approve it, you would have to sit and wait. Now, they've said if KRA does not respond to you within 6 months, it is automatically approved. So that actually makes things a little bit easier. Then another thing, dividend distribution reporting. this is important. Companies must report dividends paid from untaxed profits when filing returns. Previously, after paying taxes, whatever you do with that money was your own business. Now KRA wants to know what you're doing with it. So this might be difficult for a lot of people, especially large organizations that actually pay dividend. So this kind of now observation of money that is moving even after you have declared your taxes. All right, so what does this mean for everybody? So let's just have a look overall. What does this mean? If you're an employee, that means now you have higher per diem that is not taxed, and then you have bigger pension exemptions, and then you have mortgage relief. If you're businesses, you have at least clarity on VAT refunds, APS certainty. If you're doing digital transactions, when you have some crypto-friendly tweaks. However, loss carry forwards have been reduced to 1 year, so that is a bit more difficult. And then there's some investment packs are down, especially if you're doing business outside of Nairobi and Mombasa. Then digital, if you're doing digital businesses, so there'll be cheaper crypto trades, there'll be clearer tax rules. However, the scope for taxation for significant economic presence has been increased. You'll require to do more compliance. If you are corporates, you have lower tax rates for NIFC firms. But then there'll be more withholding tax demands. Benefits and opportunities. So if you're a business certified under the Nairobi International Financial Center, you can reduce your tax from 30% to 15% for the first 10 years. Then if you donations for public sports facilities are now tax deductible. Companies have new opportunities for CSR initiatives that offer other tax benefits. So, if you're in business, what should you do next? Because there's a lot of things. I think you need to sit down with a tax expert and plan your finances again. Plan your tax environment. See what, especially when now they're saying if you're dealing with VAT exempt products, you really need to sit with a tax expert and ensure that you're covering yourself, because now they're coming for people who have been declaring erroneously tax exempt goods. So review your financial and tax planning strategy. Then obviously ensure compliance. Compliance is easier to deal with. Instead of trying to chase KRA, what we say, we don't do tax evasion, we do tax avoidance. So the problem is, if you don't have a tax expert that you're working with, you end up paying taxes unnecessarily. We want to pay taxes, yes. We want to pay the correct taxes, but we don't want to pay for things that we're not supposed to, or we don't need to pay for. So make sure you have proper tax planning strategies so that you're not breaking the law, but then you're avoiding taxes on things that are unnecessary. And if you have ability to be in zones that allow you to do business with less taxes, then better for you. Especially things like the NIFC. All right. So the things that you need to remember in terms of dates, most reforms will apply from July 1st, that should be next week, July 1st, 2025. Remember that the Finance Act has been passed. Parliament approved it on June 19th, and it was signed into law on June 26th. Well, why it should be important for you? With a public debt of about 66% of our GDP, we need smarter revenue measures that will not cause the protests we are seeing. So I feel it's important for all of us to understand what the Finance Act means. I know there are other things that have been significant that happened prior to the Finance Act. I know there are changes in taxes, especially for customs. This was not under the Finance Act. This actually was passed before, where there were changes in how KRA was managing its tax system for imports. So that's another conversation that we need to have, but that is not under the Finance Act. So there are other things that had been passed before that will be impacting your business. All right, so we had a few questions before that we needed to answer about taxation. So how do I balance compliance with innovation? I think the best thing is don't work without an expert. Unless you're an expert yourself in taxation, ensure you're working with an expert so that they tell you your limits in terms of what ventures can you go into, what can you make sure, how do you deduct your expenses so that you're paying as least as possible within the constraints of the law. So we're not promoting tax evasion, remember we're promoting tax avoidance. So if you're able to get an expert in tax, then it allows you to be innovative and to ensure that your business is still a going concern. So we still want to increase our revenue as much as possible and reduce our cost as much as possible, but then still be able to make a profit for the business and ensure that we are liquid enough to continue with business. So someone is asking, are small businesses being taxed out of existence? It depends on how you look at it. So if you're not, let me put it this way, if you're burying your head in the sand when it comes to taxation, your business will struggle. But we are where we are. There's nothing much, I think, at this point that we can do as business people or as entrepreneurs. We are still required to follow the law at this point. So the best thing to do is to understand what is out there. How do the current taxes affect my business, regardless of what you're selling? Then figure out, how do I survive within this environment? Remember, there are businesses that will still survive and the businesses that will still thrive even with tough economic times. And I want to encourage anyone who's out there feeling low, feeling like the world is about to collapse around you. And we are going through tough times, and it is understandable that we're feeling a certain type of way. But I want to encourage you that you still can make it. It's tough, but you still can make it. I don't know how best to encourage you, but you still can make it. So learn as much as possible about how this impacts your business, how the new taxes from last year, because this is just, I think, the icing on the cake in terms of taxation. Learn how the Finance Bill or Finance Act 2024, 2023 and 2025 have impacted your business. Figure out what it is that they have done and where your business might be leaking money, and try and close those gaps. And then figure out, in these tough times, how am I going to survive? If you're at the end of your wit and you don't know where else to turn, find a consultant. If you don't know any, we are consultants as well. We can help you figure out how to turn around your business. So don't struggle alone. Don't lose hope. Don't despair. We still can make it out of this. We owe it to each other to get out of this. We need to make it to the next election, at the very least, to make better decisions. So we cannot allow ourselves to collapse now. So make sure that you have figured out how these things will impact your business so that we are able to move forward. All right. Someone is asking, is this the right time to hire or should I automate? It will depend on how your business is doing. It depends on what your business requires. I'm all for automating as much as possible if it's going to save you money. However, you need to see the detriment of automation. If you automate so much that you lose personal touch with your customer, then that will affect your business. So yes, automate as much as possible. Bring your costs down as much as possible. When the economy is bad, we back the right business model that works for your company or your business, and now let that work for you. All right. Then someone else is asking, how do I prepare for these changes if cash flow is already tight? When we don't have money to pay for a consultant, talk to someone you know who's good in taxes. Find a friend. If this is the time where we're talking about networks, this is where networks come into play. Within your networks, you must have somebody who understands finances, who understands HR, who understands sales, who understands marketing, amongst the people who you know as friends. so that by the time you're not able to find someone who you can pay to get expert opinion, at least you have somebody who has a level of understanding, who can explain certain things to you. You might not get the level you need for your business, but at least you'll have some sort of understanding. What we are fighting against is ignorance. You must understand the law, you must understand the economy, you must understand the industry you're playing in to succeed. Don't bury your head in the sand. Make sure you're up and about and understanding everything. Get as much information as is possible to be able to run your business. Be curious. You have to be curious about what's going on around you. You have to be curious about how that impacts your business. You have to be curious on how will my business survive 5 years from now, 10 years from now. Is this a business I'm going to leave for my children? Is it going to feed my grandchildren? If you're not thinking that far with that business, don't dedicate that much time with it. Go and move on to something else. You really do need to think about your business's future. All right. What does this bill mean for digital businesses? I think we have explained in detail about what that does, especially for large businesses that are operating in the country, mostly multinationals that are operating within the country, and also for transactions that are happening locally. I think that we have covered within the conversation that we have had today. So if you have any questions, if you have any concern and you're worried about something, please feel free to comment, feel free to DM us. We're happy to answer your questions. But what I would want to part with you today is, please do not despair. If there's anything that I feel deeply about, is if we are despairing, we will be powerless. If you're despairing, you will not be able to transform your business, you're not able to transform the environment. You need to get to a place where you are able to drive and push forward. You're able to lead your team out of despair. You're able to lead everyone around you to believe in the business, to believe in the ability to succeed as well. We still can make it even through these tough times. So my heart goes out to all of us during this very low season as a country. For everyone who has lost their lives, or anyone who's lost a family member, for mothers who are crying for their children right now, our hearts are with you. We're very, very touched, and any help that anyone needs, please reach out. We are looking, we want to support each other during these tough times, and we want to shed some encouragement to anyone who's out there. And we pray that all of us will make it out alive and will make it out successful. Thank you very much. We'll see you on the next one.